decisions. All right. For those who have followed my sessions consistently, you would have understand that there are certain metrics I use in measuring if the market is suitable for me to take a trade or not. All right. But before we dive straight into our session today, I would like to know where you are watching me from. So, where are you watching me from? Use the comment section to share with me where you're watching me from. All right. I would like to know where you are watching me from. I would like to know where you are watching me from. Where are you watching me from? Okay, I'm waiting for you. All right. Let me know where you're watching me from. We'll be taking live trades. So I need you to pay attention. Okay. Let me know where you're watching me from, guys. Okay, I can see Kwara, Abuja, India, South Africa, Ilorin, Dubai, Warri, Taraba, okay, Port Harcourt, Nigeria, Somalia, Lagos, Adamawa, South Africa, okay, Makurdi, Benue, okay, I'm seeing Sokoto, Nigeria, Warri, South Africa, Abuja, Namibia. Okay, fantastic. Yeah, I welcome you all to tonight's trading session. All right, let's look into trades around the pairs, okay, that we have here. All right, so let's look into the USD JPY. All right, let's look into the USD JPY and possibly take some trades. Now, I open my market. We are on the USD JPY. The first thing I want to do is to start from the higher time frame and to understand what level are we on the higher time frame. All right, what level are we on the market at the higher time frame, and from there I'll be able to make decisions on what next to do by going to the lower time frame and the lower time frame. Okay, so let's go straight to the point. We're starting with the monthly time frame. Do we see what's happening here? So obviously we can see that the market has gone, has been on an uptrend for a while on the monthly time frame. So it has been on an uptrend since 2012. Went up to this level, came down a bit, went up again, came down a bit, and now back to the position, the level where it was in 2014. All right, so we are saying that for USD JPY, the market is at the level it was in 2014, the price level it was in 2014. This is very, very interesting. All right, this is very, very interesting because you can see the difference between 2014 and 2022. All right, 2014 and 2022, that is 8 years. All right, that's 8 years. So we are saying that the market at this level was at this level, touch this price level in 2000 okay, this is 2014. All right, 2015. Okay, good. It touched it in 2015, as you can see here. Right, that is 7 years. Then 7 years after, the market came to test that same region. The market came to test that same region in 2022 after 7 years. All right, now this level is a very significant level because we've seen it that at this point this level was a key resistance level. All right, and we can see that price has gotten to that same key resistance level now. All right, now this is the monthly time frame. Let's go down to the weekly time frame, okay, so that we would have a better story to tell. Now don't forget that this level now is a key resistance level. Let's know. Okay, good. Oh, fantastic. Why do we call it a key resistance level? Do you see it clearly now? When we zoom out, do you see it clearly? When we zoomed in, you can see that from 2015 to 2022. All right, now let's zoom in. Okay, I'll zoom out. You can see this now, that this level is a very key resistance level. Okay, you can see price has rallied round these levels and have been rejected, and then price is currently at this same level now. All right, now there are two things that can happen here. All right, the first is the market can be rejected here. All right, and another scenario is there can be a breakout from this level and the market can keep the bullish momentum, and right here there might be a rejection and the market might have a sustained bear market a bit. All right, now let's get into something very, very much interesting. Let's go to the weekly time frame. I believe you're following. Let's go to the weekly time frame. Great. Now, as you can see on the weekly time frame, let's identify our market structure. All right, our market structure. Good. Our market structure. You identify the supports, the key supports and the key resistance levels. The key support and the key resistance levels. The key support and the key resistance levels. All right, good. Now you can see here that price has once touched this level at this place and was rejected. Same price footprint appeared to be here. Another price footprint on that same level appears to be here. Now at this current level now, there are higher chances that there will be a footprint. Okay, now you look at this. Now the candle is above this line. All right, now if this candle is able to break out of this resistance level, right, and a retest happens and still the third candle closes in a bullish candle, right, what happens there is that the market would keep going higher, the market would keep going higher. If there is a breakout at this level, right, the market would keep going higher. Don't forget on the monthly time frame, you can see it closely, that you can see that it still has so much room to the top, and this level has actually been a key resistance level. The current level where the market is right now is a key resistance level, so there are higher chances that the market can break out of this resistance level that has been holding the market for years, right? Okay, look at that. Let me show you something So you can see that market got to this price level since at this point, right? So you can see that at this point it's 2001. So market has actually not been able to get back to the same place until 2000 and until 2000 and good on 2007. Okay, now market was not able to get to that place until 2015, after 2007 and after 2001, right? Now after 2015, price never got to this level, right? So price is now at this level now in 2020. Is it becoming clearer to you now? So there is more information to take out of this. So if the market breaks out of this level, there is so much room to the top, right? So much room to the top. So, but if market rejects at this level, then we might see the market coming to test this minor resistance level and minor support level here. Might see the market come to test the minor support level here. Right now, let's take a deeper look at the chart on the daily time frame. So because the daily time frame will help us and give us some clear insight onto what we are looking for. All right, now good. So you can see that on the daily time frame now there has been an uptrend. On the monthly time frame, it doesn't look like an uptrend, it looks like a consolidated market. All right, now but in the time frame it looks like what an uptrend. And if you can see that when price tried to get to this level, see that price was rejected. All right, now let's go and see where this level is on the higher time frame, same monthly time frame. Do you see that? So, and look at what happened here when price came here. So you can see that this level is a very key resistance level. Now what we are watching is this month's candle, right? If this month's candle close above this line, all right, then there is a tendency that there will be a further bullish momentum. Okay, now let's go to the daily time frame. So the daily time frame, now you can see that there's a breakout of this level. See the bullish candle that created the breakout of this level and created the bullish momentum a bit. All right, and we can see what the market is doing at this region currently. Okay, now if the market successfully closes above this level, all right, now there is a higher chance that the price would keep going higher. Now let's look at the 4 hours chart. Interesting. Now look at what's happening on the 4 hours chart here. We can see that the market has actually created some patterns, right? Some patterns here and some patterns here. Now let's look at what okay, so you see what's happening here now. So this place is telling us that this level, let me indicate the level with an object. Excuse me. Okay, I'm coming. All right, good. Now you can see that this level now, okay, has now become a level to actually watch, because you see that price has come to this level and was rejected for the first time, came the second time and was rejected. Now look at the rejection candle here. Let me take this away so that we can see. Okay, now look at the rejection candle. Look at it here. All right, and then a momentum was created, then another momentum was created. All right, for me, I see a bullish upside. I see the market touching, going higher to this level. All right, I might want to catch in on a quick profit if I'm an intraday trader, and if I'm not an intraday trader, I want to see the market break out of this higher line before I position for a bull market. However, there are other strategies you can use to position. Now let's do something here. So I come here, I will take this trade. All right, now before I take this trade, I want to identify my stop loss and my take profit. All right, so I say, okay, it's a 4 hours chart. I want to put my stop loss at this level. Should the price come against me, then this support level here, another support level here, but I choose this support level. Okay, now, and I choose this as my take profit level. So let me buy the market. Okay, now I've placed a buy. All right, let me see what I have here. All right, so you see I've placed a buy here. What's happening? So I want to set my stop loss and my take profit. Don't forget, I said before you take a trade, always identify your stop loss and take profit, and don't ever think stop loss and take profit are not important. If not, you'll be shooting yourself on the foot. All right, so I'm coming. Okay, we are trading the USD JPY. Okay, let's set our stop loss ourselves now, and I'll take profit. So let's go. Okay, good. So let's put our stop loss. Like I said, this will be our stop loss. That's 125.642. Oh, fantastic. Then our take profit would be 126.315. Okay, then we click on the modify button. As we click the modify button, we're able to see that it has been taken. If this trade goes in my favor, I'll be $2 in profit, $2.91. If this trade goes against me, I'll be 2.43. right? So this looks like a 50-50 trade here. All right, now from a swing trader's perspective, all right, you come to the higher time frame. You come to the higher time frame and you determine your entry level here, right? So a swing trader might say, okay, I want to take profit at this level, right? Given some confirmations, like I said. All right, now you need to confirm. Your confirmation should be around the market breaking out of this level. Now if the market breaks out of this level and comes to reject, then you can buy, because you know the market is going to test the next resistance level, which is at this place. I believe you get that. All right, for those who want to catch in on quick profit, you can always take advantage of that, at the short run. So let's check the same chart out in the 1 hour time frame. So what's happening on the 1 hour time frame? So you can see here, the 1 hour time frame tells us a broader and a clearer story. All right, the market goes up, creates a resistance level and was rejected, goes up again to the same level where the market was rejected. This level becomes the resistance level. All right, market comes down, goes through that level and breaks out. So see the breakout candle. This is how a breakout candle always look like. It's always full bodied. All right, and then it goes to the resistance level and the market starts coming down. All right. Then the market has calmed down now, and another breakout candle has occurred at that same resistance level. All right. But price rallied a bit. Price is currently rallying. But if you look closely at how price is rallying, you discover that there are so many bullish pin bar like candles. Bullish pin bar. All right. And you can see that the wick is like the close is closing above the previous one. All right, above the previous one. It tells us that there is a bullish run about to happen at this level. So we are expecting a bullish run. Excuse me. We are expecting a bullish run at this level. Get that? So we're expecting the market to break through this level and touch that previous resistance level, which is this. When the market does this, we are in profit. Okay. Robert said he's following keenly. I love that. All right. Great. So we've taken a trade on the USD JPY, and you saw the way I actually walk you through the strategy, what to look out for. Number one, you want to identify the market structure. Is it an uptrend? Is it a downtrend? Is it in a consolidated market? Then you want to look at it on the different time frames, starting from the top down approach using the monthly time frame, down to the weekly time frame, down to the daily time frame, down to the 4 hours time frame, down to the 1 hour time frame, 30 minutes, and the likes. Great. So this would help you to be able to have a clearer perspective from a broader view. It's more or less like you take a microscope, you look from afar, and you are able to zoom closer, and you can see the details of what is actually a distance apart from you. That is the top-down approach. You're coming from the higher time frame to the lower time frame. You get clearer understanding, you get clearer details, clearer information of what the market is doing and what is happening on a monthly time frame, what is happening on a weekly time frame, what is happening on a daily time frame, what is happening the last 4 hours, and now what is happening in the last 1 hour as well. All right, which is why you need to pay attention using the top-down approach. Having identified your market structure using the top-down approach from the higher time frame to the lower time frame, you also want to look at the levels via which the market is, which is the resistance or support level. The resistance level is also the level called the supply zone, where the sellers are willing to sell off, and the support level are called the demand zone, where the buyers are willing to buy up. Right, so you can see this level here now, where buyers actually pushed up the price. You see that this level is called the supply zone, right? I'm sorry, the demand zone. At this demand zone, there were buyers waiting to buy at this level, and the bought and price went up. At this level, you will call the supply zone, right? Where sellers are looking are ready to dump the price and sell off. All right, great. Okay, Sam said thanks, good job, sir. You're welcome. Johnson said it's engaging. I'm glad you said so. I'm glad it's engaging. Great. So you can see the reaction happening in the market, right? You can see what I said. First, there was a breakout candle. You can identify the same here, but this looks like a fake breakout. It did not last. All right, but then you look at this breakout candle here, and followed by a previous candles that are gathering bullish momentum. As you can see, the close of this is below this. This closed above this. This closed above this. This closed above. This is gonna close above this. All right, and this might be a breakout of this minor, resistance level. Okay, great. Now, all right, now should we just look? Okay, let's move to the Australian dollar and the US dollar. The Australian dollar and the US dollar. Okay, okay, let me clear this chart so that we could start from. Yeah, so now we all open this chart because we want to take a trade. Now let's start from the higher time frame. From the higher time frame, we want to identify the market structure. Good. Let's start. We go to the monthly time frame. Okay, great. Now you see on the monthly time frame, it's telling us that obviously when you open the market, you can see that while there has been a consistent downtrend, it got to a point where we can see price consolidation. So price has been consolidating within from this time 2015 to 2022. Okay, that's how many years again? That's close to 7 years. 7 good years. Price has been consolidating within this box, right, for the past 7 years. Now we want to understand the next move of the market. So you can see that currently the market is actually in a position whereby it can decide to go and touch the resistance level of the consolidated price footprint, or come to touch the downward part of a consolidated price footprint. So price has two ways now. Price can either go like this to touch this place and probably come out, reject or break out, right? And price can either come down, right, then can decide to bounce back, or then go down low, right? So how do we identify what price will do? That's what we are here for. Now let's go to, now that we've been able to identify that in the higher time frame or the monthly time frame, price is consolidating. Great. Now let's go to the weekly time frame. Good. Something interesting is happening here. So on the weekly time frame, we could see that there's been some wave-like movement, up and down, up and down, up again, down, up, down, up. Now let's map out key resistance levels here. Okay, within this place, let's just identify those levels we feel, these levels okay, good. So we could see that price actually touched this place, bounced back, touched this place again, bounced back, so this place now is a key level to actually watch. For price to have created a footprint is more or less like a snake walking through a path. You can identify, you can use that to track the direction that the serpent or the snake went through. Okay, so that's what we call it, the price footprint. So price came here, crawled here like a snake, created a footprint, gave us a sign that this level is a level to watch. Okay, then this level again, price came down here, created a footprint, did the same here. Then we don't have to spare price, we have to look closely what it's about to do. And then you see what it did here, it jumped up. Now it has come to the same level, And when we look closely on the higher time frame, which is the weekly time frame, we can see that last week the market ended in a bearish momentum with a bearish pin bar at a resistance level. A bearish pin bar at a resistance level. A bearish pin bar at a resistance level. That tells a lot. Alright? That tells a lot. So from what we can see that price is rejected. Okay? Because this level is a resistance level. Now, we can make a quick decision here, except you are a swing trader. Alright? You can decide to short the market from here. Alright? Possibly short the market to this level. And you can put your stop loss here. Alright? So your take profit level is here. Alright? And your stop loss is here. So we are able to say identify the resistance level here. Now let's go to the lower time frame, the daily time frame. Oops. So here now we having another picture which is more clearer than what we are seeing on the weekly time frame. That's why the lower time frame gives you a clearer view of what is actually happening. Now let me ask you, what decision will you take seeing that price went up, came down, and there have been some rejection to the upside right at this level? What would you do? Would you buy or sell, and why? Let's use 5 minutes to answer the question in the comment section. Would you buy or sell? Would you buy or sell? Would you buy or sell? Let me know. Would you buy or sell? Would you buy or sell? I'm reading the comment section now. Let me know. I want to know. Would you buy or sell? Would you buy or sell? Would you buy or sell? I'm interested in knowing. Would you buy or sell? Okay, someone said buy for a short time. Oops. I think I'm seeing that opportunity here. Said I would buy. Oh, good. I'm getting a contrary opinion. I would sell. Okay, I have a buy from Francis. Sell. Buy because of the opportunity. Buy. Sell. I will sell. I will buy because there is a rejection candle shown there. Okay. Alright. Look, now we are at a daily time frame. Don't forget. And the rejection candle is shown here, which means yesterday the market was rejected at this level and a bullish run went up here. Now you will see, let's look at the 4 hours time frame, and you will see how you would indicate a bullish run here. So let's go to the 4 hours time frame. So this yesterday's candle, right? This was the bullish run. All right, the market came to test this level again and went up. The market is coming down here again. Now this is the 4 hours chart. All right, now from the indication of the 4 hours chart, it looks like the market wants to drop down. All right, from the indication of the 4 hours chart, the market wants to drop. All right, okay, let's look at what the 1 hour chart is telling us. Oops. Now you can see that on the 1 hour chart, there is more like price is trying to pick up. Now if you look closely at the 1 hour chart, look at this baseline. Now let me use an object for you so that you could see it. All right. Sorry. Trying to create. Okay. It's okay. Let me use this. I'm coming, guys. Okay. Cool. Okay, let me use sorry. Good. Okay, here. Let me duplicate it. Oh, can't duplicate. Okay, Control D. There. Alright, I want to create a shape in all those. Please. Oops. I believe you're following, right? I want us to identify good. I wanted us to identify these levels very well. Alright. Okay, let's identify those levels very well. Very well. Good. Now, what happens here? Price pumped. What happens here? Price pumped. What is happening now? Price is doing the same. Price is doing the same. So, I'll take a buy. Put my take profit here at the next resistance level. Then, my stop loss would be here. Yeah. Good. Yeah. Alright. Yeah. Oh, great. Yeah. Can you see that? Can you see that? That's it. I would put my stop loss. Alright. So let's take this trade now. Let's take this trade because we have a lot of people saying it's a buy to sell, it's a buy to sell. You know. Yeah, someone said from the 1 hour time frame it's a better buy now. It's undergoing a retest, so I'll buy. Okay, great. Buy. Okay, with the target immediately at the resistance. Great. And low weak at stop loss. Fantastic. So I will buy. Okay, then let's set our stop loss immediately. So we decide to set our stop loss. Okay, here our stop loss at 0.73744. Then our take profit is 0.74596. Okay, then bang. Okay, modify. So if the trade goes against me, I would be losing $4. If the trade goes in my favor, I would be okay, yeah. Oh, I'm putting my stop loss here. Okay, let's put the stop loss here because I want to. Okay, let me look at. I want to lose like a 2:1, right? Okay, good. So I'm making like close to $4 here and 2.6. Okay, more like 2:1. Yeah. So you must be able to mitigate your risk, calculate them very well, you know, because you don't just want to take a trade whereby a little loss can, you know, take a huge chunk of your account. All right. So you can see here, this is a buy. Let's check out USD/JPY. It's still performing, you know, maybe some magic, but then let's see. All right. Yes. So yeah, for the lot size, I use 0.1. Yeah, so if you have any question, I'm open to questions now. You can ask your question. Do well to ask your question now if you have any question. It was an interesting time. So ask a question if you have any question. Ask a question. I'm waiting. Okay, let's ask a question now, please. Anybody there? What is the best lot size to use? Fantastic. What is the best lot size to use? There is no best lot size per se. Alright, there is no best lot size per se. So your lot size, the lot size you use is dependent on your risk appetite. Alright, your risk appetite. If you are risk averse, then you will want to mind your lot size. You would care about if you are using a 0.5 lot size on a $100 account or a $200 account or a $1,000 account. Alright, you want to be careful using a large lot size on a small account. Alright, so for the my entry point was immediately we took a market price. Then our stop loss for, look at it here, is on the screen. Our stop loss for this trade for Australian USD is 0.73932. Our take profit is 0.74996. Then for USD JPY, our stop loss is 125.642. Our take profit for USD JPY is 126.315. He said if support is tested multiple times, it shows the support is strong. Right? Look at it. 1, 2, 3. Right? It shows this level is very, very strong. Alright? Very, very strong. Yes. So when considering trend line, like I said when you're considering trend line, you want to, when you're opening a trade, when you don't take a trade now, you ask yourself, what's the market structure? Is this in an uptrend or a downtrend? If it's in an uptrend, then you use your trend line to identify. From all the trades we've been taking now, most of which the two has been consolidating. All right. So from this, so you can see that price has been consolidating here, even when there has been a downtrend. But okay, let me use this. Okay. So you look at this now. All right. Now from what we have here, the market is in a downtrend. All right. Now price has come to touch this trend, rejected, touch this trend line here, rejected, and higher chances that price will come and touch this one too. And if price breaks out of this, then it's going to be bullish. If price is rejected here, then it's going to go bearish. I hope I'm clear. Someone says, what happens when you get to see market go against you after checking the strategies? Yes, so after checking, like now, as we took this trade now, having done our analysis, and taking the trade, our market goes against us, we would rejoice. All right, we would rejoice, right? Because we have set our stop loss and our take profit. So if market goes against us, which means your stop loss is to stop you out from losing, from losing more than you can bear. All right. So when you see that the market has knocked you out of your stop loss, you don't jump on the trade immediately. All right. You relax. You go through it again. Have you made a mistake while trying to analyze the market? You want to understand that. All right. Before now making decision either to take a trade or not. All right. So, but if you run your analysis and the market knocks you out, hit your stop loss, you don't have to worry, right? Market always creates opportunity, and you don't have to force gains out of the market. No, it's not possible. You end up losing because you are operating on emotion, and market does not care. All right, you live to fight another day. When the market knocks you out, hit your stop loss, and you're out of the trade, you live to fight another day. All right, great. What's the best time to use a trend line is when you have a trending market. Either the market is trending up or the market is trending down. If you're in an uptrend, then you want to use a trend line. If you're in a downtrend, then you want to use a trend line. Yeah, how to identify fake breakouts, right? So, like I said, when there is a breakout, there is always a retest. 80% chances are that there will be a retest. So, you might want to wait. If it's on the 1 hour time frame, you might want to wait for the third candle to close. After the breakout, you wait for the second one to close so that you can see what position that one will close. Either it would retest or it will close above the breakout candle. Alright, if it closes above the breakout candle, then you want to enter the market. If it retests, you have to wait for it to close and wait for the third candle to also close, so that with that you'll be able to determine if this is a fake breakout or not. Okay. All right. So, for what someone is saying, okay. Like I said, there is no best time frame. All right, but there are time frames that are important when analyzing the market. For specific traders who are intraday traders, swing traders, you want to consider the top-down approach from the larger time frame to the smaller time frame. Okay. All right. Someone said multiple time frame testing support is becoming weak and chances to break. Okay. Yeah. Great. So like I said, when there are multiple multiple testing of a particular price range, yeah, so it can indicate that the market is interested in breaking down, in going down, right? The market is interested in going down. Okay, but when they are on some other cases, the market is also showing that level, right, is a demand zone. Okay, so there are two ways about it. What governs the financial market, the forex market, and positions you for a win is risk management. So no matter your strategy, risk management is 90%. Your strategy is 5%. your entry level and exit level takes the remaining 5%. So regardless of if there are multiple touches here, it means it wants to break out, blah blah blah. Alright, so I've been able to answer some questions which I've been seeing repeated questions of the same question. So I've been able to answer them. Alright. Thank you very much for joining us. If you are using a $20 account, a $100 account, you want to stick with 0.01. Right? If you are using a $1,000 account, you don't want to stick with 0.01. Right? Also, the lot size you use is self-determined, right? I'm only telling you what would keep you safe. Okay? Yeah. So thank you very much for joining us. We look forward to having you in our next session, which is next week Thursday. I hope to see you soon. Thank you.